Welcome back, talking more about ways to save on your taxes. And today we're going to dive into some of the details about what income tax versus self-employment and payroll taxes are and ways to potentially save there. So, in the world of tax, everything seems to be taxed nowadays because not only does your income tax, your payroll's tax, then we've got sales tax, property tax, death tax, estate tax. Tariffs are all over the news. That's imported tax. So taxes are everywhere. So let's break down something that's a little bit more for business owners. So if you own a business, what you're going to be doing is you're paying two taxes on the income that's generated. And income, that's going to be the income after expenses. So you have your gross revenue, which is all the money you receive. You reduce that by your expenses, and that's going to be your income. So that income is always going to be subject to income taxes by the federal government and your state if they have an income tax. But the next part of that is you're going to also owe self-employment tax on that. And that's if you are a Schedule C or a sole proprietor or even a partner in a partnership that is subject to self-employment taxes. So one way we're able to get around some of this, not all of it, is by creating an S Corp for the business and then having the business as its own standalone entity and tax return. When we do this, we're not going to have to pay payroll taxes and self-employment taxes on 100% of the income like we would otherwise. We're able to lower that amount down by running a payroll for the owner or the operator of that company. And that payroll can actually be set at what we call a reasonable standard. Well, what's reasonable? That's a case-by-case situation that you're going to want to talk to your tax professional and do a risk assessment on how aggressive or conservative you want to be with that number. Also, there are some other factors. The higher we do that payroll, the more we may be able to get a qualified income business deduction, or we may be able to also contribute more to a SEP IRA or a simple IRA. So there are reasons that we may want to increase the owner's payroll and pay some more of those taxes because we're going to get a deduction on the other side. However, what we do find is that when we reduce that income or the payroll taxes or that self-employment tax, sometimes we can save on excess of over $10,000 in taxes. And what we do have, though, is we have the additional expense and administration of doing another tax return and payroll. So expect to pay a few more $1,000s for a tax professional. So it's not a dollar for dollar exchange when you do this. You do have some more expenses, but if you are making enough money and paying enough in these taxes, well worth looking into and talking to a tax professional to see if this is an opportunity that you can benefit from. If you'd like to know more, come on over to our website at palmettostax.com, hit like and subscribe, or feel free to shoot us a message.